If Republicans keep the House next year, you are a top contender to be chairman of the Financial Services Committee. What will some of your top priorities be?
Yeah, well, and first and foremost, you indicated if we keep the majority, and that's what I'm working towards. When I was in the Michigan State Legislature, I served for 3 terms total, and 2 of those were in the majority. The third and final one was in the minority. The minority is not fun because you are really not setting the agenda, and so we're working hard on that, and first and foremost, getting back ourselves. That you have to tend to your own garden before you're looking at others. But having said that, and assuming, and I do believe that we've got a very good opportunity here to come back, maybe a slightly narrower majority, but I do believe that we'll come back in majority. We've got a number of things that we have to tackle. First and foremost, we've got some insurance issues that we're going to have to deal with. Hopefully this fall after the elections, we'll be able to do some sort of long-term NFIP, the National Flood Insurance Program reform. That needs to happen. If we're not able to do that, that will be one of the top priorities, along with TRIA, the terrorism insurance program that we have that's going to expire. So we have those insurance issues. We have housing issues, and that's my background, is actually in construction and development, and as a former licensed realtor, I've been very involved in housing for a long time. And we have to deal with Fannie Mae, Freddie Mac, FHA. It's been 10 years that they've been in conservatorship, and we've got to deal with that. So I'm hoping that we're going to have the ability to tackle that. You look at fintech, what's happening in that space with ICOs and the cryptocurrencies or crypto assets that are happening. Data security, that's clearly going to continue to be a major issue. And then at the end of the day, and this is a lot of what my subcommittee deals with right now from capital markets, is how do we make sure that Mr. and Mrs. 401k are getting the proper opportunity to allow their investments to grow? How do we make sure that investors and entrepreneurs and innovators are going to take what we have here in the United States, which has traditionally been an advantage for them, and how do we maintain that for them? How do we encourage them to graduate into a publicly held company, a partial IPO, or whatever it might be? And we've seen so much more of the capital getting locked up into private hands. It's been harder for Mr. and Mrs. 401k to go and invest and do those types of things. So, retail investor is a key priority. Looking at insurance issues, looking at housing issues, and then what does the future hold? That fintech type of issues that we have to deal with, not just domestically, but internationally, and how we're going to harmonize some of those things.
It's a big to-do list.
There's a lot to do. We've made some great progress on the banking side with 2155 recently, and then more recently what we passed in the House here with the Jobs 3.0, that Jobs Act, and that investor that needs to be going out there and looking at what their options are for the future, I think was well served by the legislation that we just passed a couple of weeks ago at 406-4. So we got some pretty big issues addressed, but there's always a lot more to do. Always a lot more.
Well, in both the economic growth legislation that you mentioned and the Jobs Act 3.0 bill, bipartisan and a lot of incremental changes.
Yes.
What you just described, housing reform, reforming the GSEs, that's a big item. What confidence do you have that you'll be able to get the bipartisan support needed to really move forward on any of those things?
Yeah, well, if I could stand on the House floor for 2 hours with Maxine Waters and agree on an 8-bill package that went into the Jobs 3.0, I do feel optimistic, cautiously optimistic, because there is a lot of heated rhetoric that's out there in the general public about what's going on. But I think if you talk to any of our colleagues on both sides of the aisle, they'll tell you way more often than is portrayed. We cooperate, we communicate, we try to figure out solutions. That certainly isn't always portrayed out in media, and I get it. I get that conflict tends to drive listenership or viewers and readership. But we've got some things that we have to deal with. And it's not just within the House of Representatives. I think we need to get better at our communication with the Senate. I think that was one of the lessons coming out of Jobs 3.0 is we just didn't develop a program and a package and go, okay, Senate, here you go. Now do something with it. We really, on the front end, tried to work with them. I was contacting senators on both sides of the aisle, telling them the direction we were going, and asking, what are your priorities? What do you think are must-haves? What do you think are the no ways, we can't go there type of issues? And I think that was helpful as we were putting together our package, which then prompted certainly, I think, more cooperation within the House to go do that. So oftentimes, in my experience, both in the state legislature and here, it's communication, it's trust, it's relationships, right? You can't build trust if you don't have a relationship. You don't have a relationship if you're not communicating. So we need to go out and do a better job of that.
In terms of communicating with the Senate, like you just described, what evidence is there that that's working, right? I mean, the Senate hasn't yet taken up the, what confidence do you have that there are particularly some Senate Democrats that share your views, particularly that this package should be a priority? Yeah,
well, I've had a chance to talk to one of my own senators, Gary Peters, who is very open to this. They've got a lot on their plate with the appointments and obviously with Judge Kavanaugh and that Supreme Court Justice appointment. But they know that there are other things that they have to do as well. And this is hopefully, again, something that where work on the front end has brought a willingness to have the discussion. And that again, I think is an accomplishment, but that doesn't cross the finish line, right? That's progress. I would say it's better than what we have seen in some previous years with other issues where we've almost been completely disconnected, with the Senate working on their priorities, the House working on our priorities, and ne'er the twain shall meet. And that has gotten better over the last couple of years, and we just need to continue that.
This week marks the 8-year anniversary when Dodd-Frank was passed. We're now 10 years from the crisis, so a lot of talk on what's changed, and certainly that's on investors' minds. Is the financial system, the U.S. financial system, safe?
Oh, I think it is. Now, some would argue, in fact, I just got out of a meeting, that some of the belts and suspenders that have been put into the regulatory environment actually may be now hampering some of our growth. And and you can take a look at what has happened with some simple things like free checking and different amenities that banks had been able to offer previously. Banks and credit unions no longer are able to do some of that stuff, not because they're outlawed, but because the practical economics just don't work oftentimes. I think you look at things like the Federal Reserve becoming almost like a super regulator. How do we separate their properly independent monetary policy work from their regulatory work? So I think we still need to go in and look at that. How do we deal with the international standards and how they comport to what we're doing here in the U.S.? And that could be on insurance, it could be in banking, it could be in investing. So I believe we're safe. I believe that if you look at reserve levels and those kinds of things, we have adequate protection. We've maintained protections for retail consumers and investors, but we also need to make sure that we're not strangling the innovation and the growth and the markets that we have here, because those markets are vital, whether we're getting mortgages for our homes or car loans or student loans. We've got to make sure that we've got a deep and liquid market here, which has been in the past. We've been, the gold standard when it comes internationally, and we've got to maintain that edge.
So you're talking about deregulation and pulling back some of the rules.
I would say regulation right sizing. Okay. It's more than just saying, well, we don't like a regulation because we don't like regulation. It's what's the purpose? What's the intent? Did it hit the target? Oftentimes, I think the intent was right, but the vehicle, the delivery of it may be off, or the unintended consequences. And this was what drives me nuts about some folks who will protect Dodd-Frank, every word, every comma, every dot over the I, without asking questions, because it's somehow the citadel that cannot be breached. Otherwise, people are put in peril. It's like, well, wait a minute. We've got to make sure it works. That's the responsibility we have. And in the 20 years that I've been working either as a staffer or an elected official, I've never seen a perfect piece of legislation yet. And that's why we shouldn't shy away from it. We should have the courage to be able to go and acknowledge that, and then go figure it out. And it drives me a little crazy when I see some of my colleagues who just believe you can't even bring up the issue as a conversation. And I don't think that just deals with reality.
Okay, I was going to ask, though, are there any areas where you think there should be more rules or strengthened rules? In other words, are there any areas, as you look at the markets and the financial system now, that concerns you? Yeah,
ICOs is one of those initial coin offerings, what we're doing with cryptocurrencies or crypto assets. That's pretty muddied yet and fairly opaque. The SEC and the CFTC are both trying to kind of figure out how I describe it. Everybody's trying to figure out whether it's fish or fowl. It turns out it might be a platypus. It's kind of an unknown or sort of something in between. And how do we deal with that to make sure that we maintain investor security and making sure that we're protecting them properly, yet allowing the subject area to really hit its stride and grow, and because it's going to be useful. We also know that blockchain technology is going to be very useful and in different applications. So how do we make sure that the regulators are viewing these things through a modern lens? Way too often we're looking at, oftentimes regulatory law from the 1930s or the 1940s, or, wow, we updated it in the 70s. It's like, okay, we've got to do better than that. We've got to do better than that, as we are trying to make sure that we are competing on an international stage. And we've got to just use our regulators properly.
Do you think, does that include giving more authority to the Securities and Exchange Commission and the CFTC to regulate?
It may. We're having that conversation right now, or certainly lending clarity. I think that's one of the issues. Is not necessarily authority, but clarity. Who has the authority? How does that get dealt with? And I think we need to work cooperatively with our regulators, because as we were just discussing Dodd-Frank, Congress doesn't always have all the answers. I'm the first one to admit that. You're only as good as the people you surround yourself with, and we've got to make sure that we are using people like Jay Clayton at the SEC and Jay Powell at the Fed, or Steve Mnuchin at Treasury, and others, and the experts that they have below them to help go figure some of these things out. But we shouldn't shy away from them.
Have you ever owned any cryptocurrencies yourself?
I have not. Why not? Because I want an uncomplicated life. And here's one of the things that I decided when I was coming into Congress, that I would not invest in any of the areas with stock or any of those kinds of things in any of those areas that my committee worked on, financial services. So I don't own any bank stocks. It's interesting because my sister is a bank branch manager, and with a regional bank, mid-size regional bank in the Midwest, and my brother had been a stockbroker. I try to keep that very minimal. I only own some of the assets that I had come into, and then, as I had said, my family's in real estate. And I'm in construction, and I own a small sand and gravel operation. That's third generation, and we do a little real estate development on the side, and I try to make that less complicated, because I want to have a clear mind and a clear eye about this, and I don't want anybody else to question otherwise as well.
Going back to this theme on 10 years and 8 years from Dodd-Frank, why is it that the biggest U.S. banks and Wall Street is still so unpopular on Capitol Hill?
Well, they've been vilified, and there have been times for good reason. You look at what happened with Wells Fargo. Completely unacceptable. There isn't a single American that would look at that and say, "Oh, okay, that's fine." They need to be held accountable for that. There were mistakes made. I remember when I was in real estate and sitting at my first closing, where they slid a check across to the seller and then slid a check across to the buyer. And I was like shocked. I was like, what's going on? And this was really the start of that 100%, 105, 120% loan to value kind of regime that was happening. And there was a lot of us in the industry that started raising alarm bells. And we know that there were some things that needed to be addressed. Whether it be in banking, whether it be in the investment side, whether it be in housing, and that really was the main point of the spear of what we saw was the housing downturn in the situation there. That remains to be fully resolved, right? And we've come a long way. I think we have changed attitudes in many ways, and I think that's a positive thing. But we've got to remain vigilant on that, because I know my constituents don't ever want to see another bank bailout again. They don't want to ever see us in a position where policymakers are being told we have to. You just simply have to, otherwise we're going to find ourselves in a collapsing economy. And that's why having some of those reserves being built up, having some of the new rules being put in place makes sense. It's just sometimes that in certain areas that pendulum has swung a little too far.
Right. Well, you mentioned Wells Fargo, though, particularly in the past few years, the sales scandal that was not tied at all to the financial crisis.
That was just bad management.
Okay, so what, at this point, do you think Congress should take additional steps to, as you say, hold executives accountable when consumers are taken advantage of?
Sure. Well, oftentimes it's enforcement of the law, right? I mean, they violated the law. We didn't need a new law to say that they had violated the law. They violated the law as it was currently written. So you got to make sure that the regulators are looking for the right things. You fully prosecute them when they come to light. That sends big messages as well, proper messages of hey, we're not going to just allow these things to go. You see it at the SEC, for example, slightly different shift away from Mary Jo White to Jay Clayton, sort of the broken windows view of if we see a broken window in your operation, and that means maybe the whole operation is corrupt, therefore we're going to go in and prosecute that. That was sort of the Mary Jo White philosophy versus what I think we're seeing with Jay Clayton, saying, okay, it's a broken window, let's investigate, but let's not burn the place down here. Let's fix the window, and then really start looking at other systemic issues that may be affecting retail investors. So I just think that's a better approach, a better mindset as you've got regulators going in and asking proper questions.
Okay. Well, what is it? Equifax is another recent scandal, if you will, in the financial services industry. You, as well as many of your colleagues, have been very outspoken on what happened there and that breach. Yeah. Both Wells Fargo and Equifax are examples where executives came to Capitol Hill. There was a lot of talk and certainly a public scolding for those executives involved. But we haven't seen Congress take any action since. So what confidence can you give voters and investors that if there are instances where you think these where executives need to be held accountable, that Congress is actually going to follow through on that?
So the accountability, though, the question I think that is begged in this is what additional law or additional rule needs to be put in place. And I'm not convinced that the automatic answer to this is we just need a new law. Again, we know that Equifax, we know that Wells Fargo, we know that some other players, Bernie Madoff, broke the law. So the question is, how do you enforce it? And do you follow through with the enforcement? And do you make sure that they are set up as an example so that others in those industries or similar industries think twice before they go out and try to cook up one of these schemes?
Going back to the race for the Financial Services chair, committee chair, fundraising on this committee has always played a big role. How, from your perspective, what input does the finance industry have in deciding or determining the next chair?
Yeah, very little. Frankly, it's steering committee. That is the steering committee system that we have in place is our peers, our colleagues, vast majority of them who are not from the committees that we serve on. They are our leadership. They are then regional folks. They are class, sometimes from the newer classes as they're coming in, people that have been added to it. And you have to go and make that pitch. As I've been going around talking to some of these steering committee folks, they're on Science Committee, they're on Small Business, they're on Ways and Means, big committees, small committees, kind of all over the place. And they aren't tuned into the day-to-day of what financial services or any of the other committees are doing. What they're looking for, and every single one of them has said, what's your vision? What do you want to do? What do you think is the right direction to go? And then are you willing to help the rest of the team, help us figure out a solution and a way to move forward on that? Are you going to be willing and able to work with others? That's a common question that I get. They're interested both within the committee structure, they're interested within the full House, but then they're also interested in, at the end of the day, how do you make sure that an idea, which becomes a bill, actually may get signed into law. And that means we've got to work with the Senate and work with the White House as well. So that has been the main focus that I've experienced as I've been going around talking to other steering committee members.
If the election doesn't go your way and Democrats take the House, should Wall Street fear Maxine Waters?
Well, Maxine Waters would appear to be the head for the Democrats, and she's been pretty clear about some of the things she wants to do. I'm not sure it's all going to be financial services related. I think she's been very, very vocal about what her views of the Trump administration are, and that she's going to be going and taking them head on. So I would hate to see our committee turn into some sort of pre-impeachment trial, as she's talked about, or other directions like that. I mean, when we've got a Steve Mnuchin or a Ben Carson or a Jay Clayton or others who have jurisdiction within our committee coming in, those are the issues that we should be talking about, not plethora of other things that are out there that might be political hot buttons and might get you all kinds of likes on Twitter or get you followers on Facebook or other places. I hope whoever it is that we're able to sort of tone down the political rhetoric and make sure that we're working on the policy side. And I understand it's hard, and I'm a social fiscal conservative. That's who I am, but I also have a reputation of being able to work with people who I disagree with, and we need to be able to do that. So no matter who is in charge, we have to do that. But I do think that the Republicans are going to maintain that majority. We've got a great set of candidates. I think that many on the left are kind of overplaying their hand with some of the messages that they're getting out and some of the things that they're wanting to do. In many ways, sort of the Democrats may be dealing with what the Republicans dealt with in 2010 and 12 and 14 and going into 16, leading into President Trump from the quote-unquote Tea Party folks. Again, check any of my records, my American Conservative Union rating and other things like that. There's no doubt I'm a social fiscal conservative, but we've got to make sure that we've got a government that functions as well.